Can Apple be the top stock forever? I had a debate with some of the Tasty Trade Desk guys here today, which I was really surprised to hear some of the old heads who've been around the market for decades at this point. Not to age anyone, I go to them for their infinite wisdom. I went to them with the question of, Apple, top stock in the S&P 500. Do you think that it can hold that spot for the next 20 years, for forever, however you want to quantify forever? And I got a resounding yes, which I was super surprised by, because we're going to dig into some data that says that that's pretty much unprecedented. And of course that makes sense, right? Because there's been multiple different top stocks in the S&P 500 since its creation 50 to 100 years ago. Not 100 years ago. The Dow Jones, I know, is more than 100 years old. I don't think the S&P 500 is, but it's been around for a while, and there's been multiple top stocks. And so I was really interested to see these guys who've been, trading spoos and everything else for decades to say that. But that speaks to how much of a behemoth Apple is. And you look here at how much technology has gained on the rest of the stock market. And of course, the top stocks in the technology sector are going to be your Apple and Microsoft and Google, the stocks that we're about to see for the S&P 500. But I just wanted to quickly paint the picture of what we're looking at in terms of performance of Apple and a couple of its friends in the tech sector relative to consumer discretionary, we don't have the other consumer sector in there. We have industrials, financials, and real estate. And everybody's been doing well over the last decade. But you have performance of about 100 to 300 percentage points better in technology. And that, of course, these two things go hand in hand. Apple and Microsoft and these tech stocks are the top stocks in the S&P 500, partly because they've performed so much better than the other sectors. Market capitalization is what weights these stocks in the S&P 500. So if each stock, let's just say, has X amount of shares, and stock A shoots up 400% and stock B is only up 50%, then all else equal, stock A will have a larger weighting than stock B. And so we've seen, obviously, the weightings increase for technology stocks, but that is by and large because of the performance here. So a little bit of context for why tech rules the S&P 500's top spots is because it's performed so well. And this is what's in everybody's mind, right? Of course, Apple's going to be the top stock forever. It's been performing so well over the last 2 or 3 decades. And I say that a little facetiously because we haven't seen a market just be the top stock forever or perform at such a level Apple has so consistently over the course of multiple decades. Here are your top S&P 500 holdings in 1973, 2000, and then currently. So essentially about 25 years between each of these benchmarks that we're looking at, these snapshots that we're looking at, and only 2 stocks that were top 10 S&P stocks in 2000 are currently top 10 stocks. Only 1 stock that was an S&P top 10 stock in 73, currently a top 10 stock. And sorry, that's to say only 2 stocks that were in 2000 now in that top 10. Only 1 in 73 is still in the top 10, and that is Exxon. And Exxon barely holding on to that 10th spot. And you can see here through these snapshots the turnover. In 73, IBM, the top stock, nowhere to be seen in the top 10. AT&T was a top stock in 73 and 2000, nowhere to be seen in the top 10. Exxon, the only one to be there for each of these snapshots. Kodak was a top 10 stock, GM, Sears, Xerox, General Electric, 3M, and General Electric in 2000 was the top stock. And then in 2000, of course, you see some companies that are fresher in your mind that make a little bit more sense. Microsoft was the number 4 stock in 2000. It's the number 2 stock now. and depending on the day is sometimes considered the number one stock. But really, really interesting concept that I always keep fresh in my mind. And of course, you might say, well, yeah, Frank, of course, a lot's going to change over a 20-year period. But if you're, passively investing in a stock market like the S&P 500 or so many of the funds that track the S&P 500 in either a direct or indirect way, then these shifts will be seen in your portfolio. Unless no one really passively invests for 3 years or 5 years. If you're passively investing, it's hopefully, considering your health and everything else, for 20, 30, 40 years. And so these are some relevant shifts, I think. And so I wanted to zero in on how IBM went from the top stock in the 70s, almost 10%. In 73, IBM was a larger weighting of the S&P 500 than Apple is today. There's so much speak about how, it's unprecedented that Apple and Microsoft are so big. The S&P is so top heavy. IBM was a bigger weighting, and it's gone from 10%. It's still an S&P 500 stock. It's still an S&P 100 stock. It's the number 60 stock around there in the S&P 500. It's 0.3% weighting in the S&P 500 now. And I know that there's a lot of time between then and now, 50 years. And we have here the last 30 odd years of price action between the two. And you can see IBM in red. It didn't die. IBM continues to exist. You see commercials for whatever software they're hawking these days. Very successful company, and has, even in this time frame, since its downfall, if you want to call it that, of the 70s to now, positive price action. The difference is that the other stocks surrounding IBM, like Apple, they're in black, have witnessed a near, exponential rise from at Apple's current price, which has been split many times. But let's take those splits out of the question, Apple's price in the 90s and even the 2000s there would be equal to about, anywhere from 20 cents to a couple of bucks. And now, and that's adjusted for those splits. Now, this is a stock that is looking at potentially hitting $200, and you take that amount of action into account, and that's a huge, huge rise in market capitalization in percentage terms, however you want to deem it. And IBM just not able to keep pace with something like that, or Microsoft or Google or Amazon's rise. And so it's not like Apple has to crash to no longer be the top stock. It just more likely might be that another stock or another sector outside of technology takes the top spot here. By 2050, only 2 stocks at this current rate will remain that you're looking at here. And this is all, of course, historical. None of this needs to happen. But given the last 50 years of the way things have shook out, there's a lot of turnover here historically in the top 10 stocks. And so you could essentially look at this top 10, theoretically, you could look at this top 10, given historical action, and take 8 of them out of here. And it's so hard. I understand it's so hard to look at the current top 10. It maybe is the hardest thing to do in any kind of criticism, is in the moment be like, everybody loves this movie, it's the best movie of this year, and be like, and look at the slate of movies and be like, well, actually, in 20 years from now, that's going to be the movie that everybody remembers. Similar game right now. It's so hard to look at these and be like, NVIDIA, the chip maker, in 20 years, that's going to be irrelevant. Or, Berkshire Hathaway in 20 years. I don't want to get morbid. Warren Buffett's quite old, so maybe Warren's not running things at that point. But it's hard to say, such a solidified entity like Berkshire Hathaway, who essentially owns a bunch of companies, they're not going to be around. Tesla, at this pace, they're up over 100% this year. It's so hard to say they're not going to be around. Then they might be the top stock. They might be the transportation manufacturer. It's really, really tough. Amazon as well. But that being said, the contrarian in me, and I'm sure all of you out there, could make a case for each of them. Especially something like an Amazon or an NVIDIA or a Meta, some of these that are more singular, that could maybe be taken out by one or two sea changes. But either way, I know that it's difficult. What might be a more helpful task is taking a look at stocks, 11 through 60 or, 100 through 500. I know that's a lot of stocks and that would be a tedious exercise, and see which could knock Apple off the top spot or which could enter that top 10, knocking 8 of them in the next 20 years out. And make a case that way, because I think that that's how we've seen historical turnover. Like I said, like IBM hasn't gone from being a $200 stock to a $2 stock. It just hasn't kept pace. And just trying to hammer home this idea that historically speaking, no sector, let alone single stock, has held the top spot in the market for 20 years, 30 years, and beyond. And by historical standards, it's likely that technology and Apple won't be holding that mantle for the next 20, 30 years. So we'll see how this all fluctuates. But there is no historical precedent for a stock like Apple being the top stock forever.